Markets are taking a breather today after a nice little pop yesterday. So let's jump in and take a look. And we have a new meme stock king on the street. So what is going on? So markets are pretty flat right now. NASDAQ up about 0.35, S&P up about 0.02, Dow Jones up about 64.52, which is 0.2%. And they've been down as much as a percent, then flat. So as always, you have to watch the momentum into the close to really understand what investors are thinking and what the projections look like. And stocks are kind of looking for that Friday jobs report and waiting for the inflation print next week, coming off the heels of the Fed reversing what Powell said last week in terms of being a little dovish, indicating that the Fed had reached neutral. They all said, we don't know what the markets are looking at. We're nowhere near where we need to be to get inflation down. And I think we're going to find that out next week. And the Fed is going to continue to fight inflation, do everything they can while the markets are bouncing off of what they interpreted as decent earnings, even though some companies missed on earnings, missed on sales, top line, bottom line, all that. They all provided rosy guidance, good projections into the end of the year going into next year. So the stocks bounced on that a little bit, and a lot of short squeezing. And again, a lot of the hedge funds trying to make up for lost ground, including one of the big managers out there, not a hedge fund, but investment manager, BlackRock. The big news today that the news was that they partnered with Coinbase to offer Bitcoin services to their institutional clients. So that word partner, I think, misled a lot of people, thinking that BlackRock literally was going to partner with Coinbase as a financial partner. That's not what they're doing. They have chosen Coinbase as a partner in sense of a vendor, in terms of a vendor to provide those services. So they're not injecting capital into Coinbase. They're not investing into Coinbase. They're not buying Coinbase. Now, if Coinbase were to go bankrupt, which some of the rumors that were floating around out there in the last couple of months, or if they're in some sort of financial trouble, then a company like BlackRock's equity arm could potentially come in and, inject some capital, buy them. So in any event, I don't think Coinbase is going anywhere. They, being a public company and having a foothold in the industry as long as they've had, if they were in financial turmoil, somebody would buy them out at this point. Maybe another platform like an FTX or Robinhood, something like that. Some of those types of consolidations would happen before the company would just completely go bankrupt and go away, unless there was some really bad stuff going on behind the scenes. But anyways, shares of Coinbase did pop. We'll take a look at that in a second. They were up 15% earlier, jumped about as much as 40 earlier today. The service in the company's prime offerings will be available to clients of BlackRock's portfolio management platform for institutional investors. BlackRock is about an $8 trillion asset manager. They did have 10 trillion before the decline in the markets. Now they're down to 8 trillion. They lost almost $2 trillion. So what does that mean? So if all of their clients, and this is only a portion of their clients, but if all of their clients, their institutional clients, let's say they make up about 5 trillion of the portfolio, maybe 7. If they invested 1%, that would be about $70 billion. Maybe 1.5% would be $100 billion. And right now, Bitcoin's market cap is $431 billion, almost $432 billion. So that would be, $100 billion going into the space would make a significant impact to the price of Bitcoin, probably increase it 20-30% just on that allocation alone. So when that does happen, that will obviously give a nice boost to the price, kind of like we saw when Do Kwon was buying back in this area here. You can see the price popping. Michael Saylor was buying during this time. So those players are out of the market. And these companies like Michael Saylor cannot borrow right now to buy more Bitcoin. This is Bitcoin on the daily, continuing its trek, putting in lower highs and higher lows in this little range that it's been trading in right here on the daily for the last few weeks. And let's see this range over here during the Do Kwon buying area before the leg down was about 102 days. Let's see how long this has been going on over here. Let's go to this bottom drop here. Right now, this has been about 47 days, just to give you kind of some perspective in terms of how long this range was before it dropped and how long this range was. And then the previous range right in here was about 30 days plus or minus, 28 to 30 days before this leg down. So the expectation is this is a consolidation before the next leg down, ahead of more inflation, more recession concerns, things like that, and just a general unwinding of the market, with Bitcoin traditionally dropping 85% in a bear market. If it continues with that trend, it puts it down to about 10.5. And as you know, we've been targeting that 15,000 to 16,000 range. This is the hash ribbon indicator showing you miner capitulation. The lower the price goes, the more risk there is for miners of capitulation. And miners are kind of floating on the fringe right now if price drops anymore. And with energy prices doubling in a lot of areas like they are in this country and around the world, it's putting a lot of pressure on miners, and their costs are higher than the yield on the Bitcoin that they're getting because they have overhead costs, borrowing costs, operational costs, things like that, other than just the raw cost. There's numbers floating out there that the raw cost to mine a Bitcoin is $7,000 to $10,000, something like that. I've heard even as low as $3,000. Their actual real cost is closer to $30,000 when you factor in interest carry, equipment, just general operational maintenance, employees, just overhead, all of the things that it takes to operate a business to mine Bitcoin, much more than a lot of people think. It's not like there's, somebody just sitting at home mining it on their home computer and all they have is electricity costs. So these big institutional operators that are mining Bitcoin have serious costs, and that's why you're getting the capitulation you're getting. And if price drops a little lower, they're going to have to unwind that even further. So that's what's putting a little bit of pressure on the space. But the real question is, when will these services be instituted? We don't have a time frame right now. Doubtful will be by the end of the year, possible, but more likely going into next year. And it's going to be just a select few of BlackRock's institutional clients. And they are quoted saying, our institutional clients are increasingly interested in gaining exposure to digital asset markets and are focused on how to efficiently manage the operational life cycle of these assets. Joseph Callum, global head of strategic ecosystem partnerships at BlackRock, said in a statement, the partnership will let them manage their Bitcoin exposures directly in their existing portfolio management and trading workflows. So that interest is a beacon in the night for the crypto community. The industry has suffered a slew of hacks and breaches, including attacks on Solana and Nomad in this week alone. Crypto has alone gone down with the broader sell-off in the risk assets and is further handicapped by the financial contagion that stemmed from Terra, as well as other things going on. Coinbase shares have been on the rise lately, but analysts are not sure why. The stock jumped 20% on Wednesday. The shares were still down nearly 70% for 2022. And then, of course, there was a short squeeze because more than 22% of Coinbase's shares were available for trading. So let's take a look at that and see what Coinbase looks like. So here's Coinbase, and that was a nice little pop on the day there. Let's put it on the hourly. It looks even more impressive on the hourly, where it rose about 40-something percent. It's up about 17% right now. The other meme stock yesterday, let's take a look at that one again. Let's see. Here we go. This was AMTD Digital. That was a nice little pop and drop there. So let's take a look at that. AMTD Digital. Let's see. Here's digital right here. So that was a nice run from, what do we have here? $7 all the way up to $2,587. So I think that one put GameStop and AMC into the dust, but it's dropped all the way back down to $770, which is pretty interesting considering the stock was hovering around 60, 70 bucks there. Took a level up to about $300-400. And let's take a look at AMTD, and let's look at the Idea Group, and that was the other one that popped from basically, what was this, $1 all the way up to $14, and now it's back down to about $4. So pretty interesting action there for these meme stocks. Here's Bitcoin on the hourly here as it kind of continues to unwind this little move here. But again, higher highs on the hourly, higher lows on the hourly for this range that it's in right now. But as we just showed, the daily here is just kind of continuing with these ranges that we've had. So the expectation is it'll, if it breaks this lower trend line here, then price will go down, retest this lower area that we had back in June, around the 18th of June, and see if that holds. And if that holds, then Bitcoin could be putting in more of a bottom in this range here, which a lot of analysts, a lot of the on-chain is showing some bottom indicators are flashing here, especially that Puell multiple. We can go ahead and take a look at that real quick. And the Puell multiple is pretty interesting as we look at that. Let's find the charts. Let's go ahead and go over to charts, market cycles, see if we can find that Puell multiple real quick. And I know a lot of people have been looking at the bottom indicator. Here's the Puell multiple here, which is typically when you get down in the green box zone. A lot of people have been referencing this later as this is your bottoming signal, but you need to look at in the past, right here at the actual market bottom, it dipped down to the lower line each time to signify a market bottom. So far right now, it hasn't actually reached the bottom line of the green box area to really indicate a macro bottom in the cycle. So a lot of people are calling this a bottom on the Puell multiple, but if you look at these past bottoms in the past bull market cycles, it reached all the way to the lower level of that bottom green box area of the Puell multiple. This is a good overall website. Look into Bitcoin for Bitcoin on chain. They've got explanations of all these charts, what they mean, how they get these numbers, where it all comes from, all of the golden ratio multipliers, the logarithmic growth curve, profitable days, the new poll. When you look at charts here, it's got all kinds of interesting stuff. Mining, it's got the hash ribbons indicator, hash rate, 200 weekly moving average heat map. Just some really, really interesting stuff to kind of keep an eye on Bitcoin, and you can go back and look at it historically, what that's looked like. There's that 200 week moving average that we've been playing with. And, let's take a look at that right now, because again, that's been resistance and a little bit of support here lately. But overall, it's been resistance. I've lost my moving average setup here. I don't know where that went. I had my charts set up earlier. I lost my moving average. Well, let's go ahead and look at that. 200 weekly. There's the 50, 100, 200, 200 week moving average right here. It's not showing me what I'm looking for some reason. I lost my indicators. I don't know where they went. Anyways, I'm no technical analyst. I just use the charts to kind of see the overall trends in the market. And one of the things that I do like to do is take this off and look at this line chart, because this kind of gives you a better idea of what the overall trends in the market can look like when you turn the noise of the candles off. And of course, Bitcoin's been in a long-term uptrend, as have all markets here over the last number of years, with corrections along the way, crashes along the way with the pandemic. The last big issues that we had were back in 2015, 2016, 2017, 2018, when the Fed tried to do what they're doing now, drop interest rates and get into a little QT and reverse QE. And when the Fed started pulling back and tapering back in this area here, this was the taper tantrum here. This was a taper tantrum here. And then when the Fed reversed course, the markets V-bottomed out of this. And I know there's a lot of people that are trying to find a bottom and are looking at these structures here, trying to find some sort of a bottom pattern or indicator in traditional markets and kind of compare that to what's going on now. And the problem is you really can't do that, because you had the Fed pivoting here, not only keeping interest rates and reducing interest rates, but pumping trillions of dollars into the economy and juicing the markets. So these bottoms are irrelevant, especially this one here, because this was a pandemic driven event here. Even though it took a while to get back out of it and get back to even, with the Fed pumping liquidity in the markets, this was a very uncertain time where businesses were being shut down. So you really got to discount this, because the markets were kind of on their way up before the pandemic. So if you just kind of continue the line on through, it just kind of would have continued like this, and this whole area here would have been negated. So your last most recent bottoming indicator that, like I said, a lot of people are looking at this bottom here, because we had this rollover and it's kind of bouncing like it's doing right now, very similar price action. thinking that this is going to be a V bottom out of it. But if you look at this, that's a very different structure than what we had right here. This was a straight V bottom because the Fed pivoted. They dropped rates instantly. They turned QE back on instantly, and that instantly shot the market back into recovery. But it still took, around 81 days, which isn't bad, a little over 2 months to get back to where it was before that happened. But this was the Fed going QT, and this is the Fed going QE. So that's the difference. We do not have that this time. So you can't reasonably expect this is not a bottoming pattern, typical of what you see in the markets. The last time we had something like that, 2009, even this had a little bit of jostling action. But again, this is where QE was invented. So had that not happened, you wouldn't have had a V bottom recovery like that. The markets arguably could have consolidated on, maybe dropped a little bit lower had the Fed not intervened. So these are not typical bottoming structures that you're going to see in normal circumstances with, just a big shot right out of it. It's generally going to want to consolidate a little bit more as it goes along. Like when you look at the NASDAQ back in 2001, let's go back and look at here. This is the dot-com crash, and you can see what more of a bottoming structure really looks like. No V bottom back to all-time highs, more of finding its bottom, a little bit of a rebound, and then just kind of consolidating upwards and kind of sideways as it goes along. Let's look at this on the weekly so you can see a little bit better what that can look like from a typical bottoming rebounding structure versus these just flat out V bottoms that you get from a Fed reversing course, which if the Fed reverses course, then like if the Fed just all of a sudden turned on the juice, we'd be off to the races again, and you'd be back to, all new all-time highs, breaking new all-time highs, and everything would be great. But right now, the Fed is not reversing course. They're not going to pivot. They have to get inflation under control, and we've got to see what a recession, potential recession looks like and the risks associated with that. But in big news, BlackRock is bringing their clients to the table. So that is going to be really good for Bitcoin. They're going to initially start out with Bitcoin, probably expand into some other assets, Ethereum potentially once that merge is done. But again, I don't expect this to happen by the end of the year. It's probably going to be more going into next year, and it'll be small allocations to begin with. This isn't going to be $8 trillion coming into the market. They're going to allocate a very, very, very small amount initially. As the market stabilizes, becomes more resilient, we get more regulation, then you'll see them potentially turn more of the faucet on. But right now, Bitcoin has to prove itself. It's got to stabilize. And the investors that have more of a risk appetite, tolerance, and ability to take risk will start allocating little by little, dipping their toe in. And the better the asset does, the more stable it becomes, the more capital they're going to put into the space, which ultimately will be very good for the price in the long run. So a lot of good things coming in the future for the space. That's a very good sign right there. That will be good for a lot of people, but we got to get through this time right now, have to get through inflation. The Fed's got to do its job, and we just got to be patient. So we're in that season of we just have to be patient, wait for the signals where the Fed says we're done, we can stop, potentially reverse course, and BlackRock pulls the trigger, opens the door for institutional capital to flood into the space. Then possibly you might see a Bitcoin ETF. And if you get all that stuff happening at once, you could have a perfect storm, launch you back to 100,000 pretty quick, and then we'll see where it goes from there. So these are the things I'm looking at. I'll see you in the next video.